Hello and welcome to another update video about MATIC. I feel today's price action demands another update with really a textbook looking bullish structure, a so-called 1-2-1-2-1-2 setup. And we want to talk about micro pullback levels. I mean, I shouldn't say pullback levels, really just support levels that should not be broken anymore if the assumption of a third wave rally that is unfolding if that assumption is valid, yeah, and working, and if that is supposed to remain relevant, then certain levels need to stay intact. But as I said in the last video, we had, or we still have, 2 or 3 different scenarios here in the chart, but they are all bullish. That typically gives a lot of confidence into an overall bullish scenario, yeah. Even if, for example, a micro support level breaks, it would still not change the larger trend on this chart. Of course, things can still break down. I mean, the market decides, the market will always find a way. However, as long as relevant conditions are being met, the parameters are being respected, certain targets should be reached. And we're going to take a look at that, talk about my preference as well. And yeah, let's take a look at the structure here. Anybody who is familiar with our wave count, this is the 4-hour chart. Shows you basically this 5-wave pattern to the upside that unfolded into the December highs, then a 3-wave corrective pullback into support, and now a potential 3rd wave rally in the primary scenario that should take us to $2.12 plus, better $2.42. Okay, so 212 is really the minimum. 242 would be the first ideal target, not the maximum. There is no maximum really, but the first ideal target. Now let's zoom in. In the previous video, we were still coming down. Here, yeah, support did hold. I made you aware in the last video that it could be that we're not even touching the support area, and we didn't touch it. I explained in the previous video why. I don't need to do that again. So support did hold. Important is that we reversed in the larger support area, in the smaller support area, and that one wasn't reached, which was okay because I outlined that as a possibility. I set it a little lower, this orange one, because of the variation of micro counts. There were 2, even within this micro count structure, 2 possibilities that I explored. And when I have 2 possibilities with basically 2 slightly different support levels, I typically prefer to give you the lower one, because what wouldn't be great is to be stopped out a little too, to be stopped out and it still goes if the support area was a little bit too high. But the market basically turned around, I think, just after my last video, and it confirmed the overall bullish outlook for MATIC. I made you aware that below 78 cents, we might fall back into the larger 1-2 setup, or even into the even larger one, and the wave 2 would still be in the making, but that means there are still other support levels available if the immediate one breaks. Okay, so as I mentioned that in our member live stream on Sunday, you can be right about the trend, but maybe the micro count changes or breaks, which happens very often. But the trend, it's all about identifying the trend, and the trend for MATIC is up. And at the moment, now let's take a look at what should happen now in this wave count, okay, which is currently the primary. So we should move higher in the 3rd wave, which should reach minimally 96 cents. Better would be 98 cents. We talk here about really the micro perspective now. But obviously nothing is given, right? Nothing is guaranteed in these markets. It looks like it's now in the midst of a 3rd wave, yes. I told you the target. But if it's a 3rd wave, which level now needs to hold? So ideally, so there's a small support area I can give you, which really should hold. So best would be to hold the 85 cent level actually. Okay, so it's the first line, 85 cents, because against that level, we can move up in a direct impulse. If we break below 85 cents, it could be that this is subdividing into another 5-wave pattern, but I think it should really do that now. And if it doesn't do that, it probably goes up in a 3rd wave straight away without any clear subdivisions. But it could still do this, like 1, 2, 3, 4, 5. And if it's doing that, then it should really hold the 83.2 cent level. If anything happens now, whatever happens now, the price should hold the 83.2 cent level. That's the 78.6 retrace level of the current rally from the intraday low. And if we get a break below that level, then it would indicate, it's not invalidation yet, okay? But it will indicate that invalidation is basically around the corner. From my experience, like 9 of 10 setups or structures fail if they break below the 78.6 Fib level. So that's really just a quick update. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.